In a bold move that could reshape the future of finance, over 80 prominent leaders from the cryptocurrency and fintech sectors are urging former President Donald Trump to intervene against new bank fees that threaten the very essence of open banking. This call to action, articulated in a letter dated August 14, 2025, highlights a growing concern that these fees, set to be implemented in September, could stifle innovation and limit consumer choices in an already competitive landscape. Among the signatories are influential figures from well-known companies such as Gemini, Andreessen Horowitz, Paradigm, and Kraken. They argue that these new charges will create significant barriers for Americans trying to link their bank accounts with their preferred financial services, ultimately undermining the progress made in financial technology policy. The executives assert that the largest banks in the country are intentionally restricting access to vital financial services, which could lead to a dangerous concentration of power within a few institutions. This consolidation, they warn, could hinder competition and impede advancements in critical areas such as cryptocurrency, artificial intelligence, and digital wallets. In their letter, they state, "This is not merely a debate about fair pricing. It is a strategic maneuver aimed at consolidating power. Such actions threaten to dismantle innovative products and could potentially drive small businesses and financial tools out of the market entirely." The implications of these fees extend beyond just the fintech industry, as highlighted by Kraken's co-CEO Arjun Sethi. He expressed his concerns on social media, describing the proposed fees as technically backward, economically short-sighted, and strategically perilous. Sethi emphasized that these charges could transform one of the most vibrant financial technology sectors globally into a restrictive environment dominated by a select few institutions. He further stated, "If we aspire to lead in areas like programmable money, real-world assets, stablecoins, and self-custodial finance, we must uphold the fundamental principle that access to consumer data should be straightforward, secure, and free of charge." Tyler Winklevoss, the CEO of Gemini, echoed these sentiments, stressing the importance of consumer rights in accessing their funds and data without unnecessary obstacles. He passionately argued, "Banks should not have the power to confine your funds and data, making it challenging for you to access your information or transfer your capital wherever you choose. This is a fundamental human right and essential for the proper functioning of the capitalist system upon which our nation was built." As this situation unfolds, it raises critical questions about the future of banking and consumer rights. Will these fees indeed stifle innovation, or are they a necessary step for banks to maintain security and service quality? What do you think? Share your thoughts in the comments below.